Hello, it is Saturday and it's day number 2 of the 6th month of the year 2018. And I'd like to welcome you to the Crypto Day morning. In today's episode, we'll look more towards the Bitcoin chart and then the stock market. I'm going to take a look at how trading it over the last 18 years on the weekly time frame, meaning once per week, just buying and selling 34 different stock codes and seeing how that would do against a normal equity fund like the SPY. Okay, so then within the Dow, and of course everything you do within your own risk, own reward, as far as any investment choices you make, I'm providing analysis for how I view the market and in cases what I'm doing, some cases. So then, we seen from this low, bottom prices making all these lower lows along the way, that it is having its best correctionary move, or really its third one, since the decline. This one was barely a move. It resisted this a couple of different periods. That was about it. Then it came up here, well, resisted it for one, broke into the 18 band on the second, stayed within it on the third, and then left it on the fourth day. And in here, after going about 3 or 4 days going sideways within it, and then sideways movement getting into such, today's up move has made it very close to the 18 average of highs, an area where I felt it could make a move towards. This area has declined, the 18 average of highs that is, quite rapidly from an area it was before when it was closer to 7,900. And I'll still be looking for that area as a potential level of resistance, or what the next key level happens to be reached at, or where I have resistance next at. We look at this on a 400-minute time frame using the same sort of deal. Here's a spot where I had a bit of time at the 18, it rolled over. Some time in here as well, just getting flat mainly, not much of a rollover but a leg lower. And then in here it had a failed breakout because this level of resistance got broken out, leaving the 18 average. Didn't have much of a breakout. It resulted in failed move higher, big fast move to the downside. And since the break of this trend line and the V-shaped formation we are now seeing within the 18, it has now had a couple of significant support tests at the 18 average of lows, and it is having current resistance test number 3 amongst the highs, for it did so here, pulled back, did so again for a second time with a pullback, and now it's within that area, but it has barely broken that level of resistance. So that does say a lot. Something I want to see even further, looking at it more short term. So we'll do so next with the 3-hour time frame, and it's even gotten above all but one level. The only one I'm looking at that it hasn't gotten above yet is the high from May the 23rd. But when we look at it from this point of view, I got 1, 2, 3, 4, 5 times in which this market has resisted this area, with 1, 2, 3, yeah, I'll count this one, 4, 5, 6 times supporting in the area of around 7,300-ish, a bit up and down. And then of course resisting here where we stand now, which is above the 7 or at 76 and higher. So it's a sideways moving market obviously, but from this last low it has had a decent enough rally where it's above these levels. It's now in its second period amongst the 3-hour of holding this through time. Let's take a look at this on a single-hour time frame. And when we look at it from this point of view, what we're getting is a lot of fast moves higher and the market's correcting, and when it's ready, some fast moves lower as well. And I'm not showing too many candles, but you can just see it continues on every single time. And well, here's a spot where you have this fast move. How does it correct? It corrects within this range, fast move lower. There's your big move higher, then it does this little bit of going sideways, fast move lower. Has a fast move up in here, it corrects, fast move higher. Doesn't do much after that, but a fast move lower. Grinding its way sideways within this correctionary move. Big move up, and it's now correcting its move higher again. We're in very, very choppy territory, as I've been talking about with the long-term range, but I'm going to finish this off on the before finishing it off on Bitcoin on that method, I'm going to move it to the 15-minute time frame. And within the 15 minutes, you can just see the length of these moves even further. And when they happen, they just happen. It goes up and down in these cases really, really fast. And as long as the price action for the price of Bitcoin is within, and it's taking a little bit to load here, but 6,000 is the actual low. The last, it's got to get above many key levels of resistance, but the big ones is the range between 9,900 and the 11,005. So if it stays between, even the 11,500 and the 6,000, which is basically a 100% range almost from low to high, then it's a very, very neutral situation showing the signs of the sideways action, bull flag, if you will, if it can hold it, which is exactly why I've called this correction as of now a half-assed one, or that of a Fibonacci 23.6, just really, really small compared to its other ones, which is 38.2, in this case 3,061.8% down, which would be $1,000. Okay, now let's move on to the stock market, and this is, for me, I don't trade stocks, so this is no intentions for me within stock trading, but going over trading strategy, how it would have worked within the stock market, and in this case 34 different individual stocks, how it would outperform it or underperform it. And I wanted to start at this high, because since this point, had you bought into stocks, held on through this big decline, watch yourself get back close to even and a little ahead maybe, and then watch it lose all over again, and then spend all that amount of time to get back to even, and now finally you're relinquishing in some gains. But if you would have got in around 145, you have yet to double your value just by hodling the SPY. And now let's take a look at a spreadsheet which will have some data for 34 different stock codes. These are all Dow components or historical Dow components. And what we have here is a closing date which starts May the 28th, the year 2000. What the code that I'm looking at, which will start with HMM, I'm not sure what that means because I just wrote it down. And here, it means something. AXP, AAPL, Bank of America, Cisco, DWDP, GE, Home Depot, IBM, McDonald's, Merck, Nike, Pfizer, Procter & Gamble, Travelers, I think, Verizon, Walmart, Discovery, Disney, Tether, no, whatever T stands for, Bank of America, Honeywell, UNH, Caterpillar, Chevron, CVX, Coca-Cola, ExxonMobil is XOM, Intel is INTC, J&J, Johnson & Johnson, JP Morgan, AIG, that one gets its ass kicked large. And I really wanted to include, I got two that gets huge, huge losses in price. AIG, and then they're going to see Citigroup at the end. But Microsoft, UTX, Hewlett Packard, and there's Citigroup. So those are the 34 codes that are done. Mathematically speaking, if I take 34 and multiply that by 2.5, I will get me a number of 85. So what I decided was I wanted to put 2.5% of a portfolio on each individual one of these and 15% in cash. Now, if you were to do this in cryptos, you would have like 15% in your base trading fund, which would either be Bitcoin, Tether, Ethereum, whichever one that one would choose. And then, of course, the coins you'd be going in. So the next set would state how many you would own. So to start this off, I just took 5,000 and divided it by the price. 5,000 divided by 34 would come up with, I believe, 160,000. But I did this for every single one of the funds. And that was how many you would own. Now we got all these decimals in here, but this is again related for how results would show in crypto trading. So here is what the value of these are. So the reason why I have value is so at the end of the week, you know, oh, this is worth a lot, or this isn't worth that much. If it's worth a lot, that means it had a very good week or period, and it increased in price. Thus, you're looking to sell it. If it did really badly, it went down in price, maybe they had a bad earnings statement of some sort, then you would buy it to get it worth what this value is, because the value would take, well, this is what I do at the very end of this, is I would take the total value, the sum of everything, the sum of every stock plus what was held in fiat. So now I know what every stock is supposed to be worth, for I take the total value and I divide that by 2.5, or I take 2.5% of it. So now when I know what each stock is worth, I know how many are required. So if 115 is required in the first one, when I own 119, that means about 4 of them are going to have to be sold, 4.5 almost. And in this one here, this is where you make the transaction. And it bought 41 because okay, wait a second. Yeah, this is yeah, this is right. This is right. So this is because I don't got cell number 2 in here. So this is what. So the next day, you can see it's 0. So these are only the buys. How many dollars have been spent? And I'm using a 1/5 of 1% rate, 0.2%. That's why I got multiply 1.002 above. After all, you're going to be paying rake in the real world. And then when it comes to get the sales, you get 99.8% of whatever you're supposed to get back. So all of this now, I can just scroll this down to what I got finished up, which is really May the 13th, because May the 20th was an incomplete week. So then let's take a look at the charts for how one would do simply by doing this exact thing of just buying and selling based on the worth of each stock. And the net result, starting with 200,000, would see your portfolio fall in 2008, losing almost half of its value. AIG and Citigroup, along with everything else, totally made that difficult for you. But that's what happens when markets go down. Since then, with a great stock market rally, it is over 500,000, under 600,000, which means it has done a little under than 3x since the return. Now what we're going to do is I'm going to scroll down and show you how it does simply by hodling or by playing the SPY. So what I did in this example, using the orange line, that was taking whatever $200,000 was worth in SPY at that time, and then that's just what they're worth the rest of the way. So the markets are moving in coordination with the orange line, as we can see, but it's always doing a little bit better. But I think what's worth note, and I'm going to push the print screen button on my keyboard and paste the information into MS Paint so we can see it a bit better. Because the type of net results that you're looking for would be stuff like this in here, notice. This is matching the previous low, where in here it barely made a lower one. Situations, even just from the outset, where this thing just goes sideways on a resistance level basis, where this orange one has a downtrend. And when this thing managed to have its down move and it got back to even at 200, well, this was still down a bit. And then when it managed to get back to even after the 2008 fall, it would have been roughly around here and it stayed there for a while. Actually, no, wait, that was, no, excuse me, rather, that's when it was up 50% for the second time, 300, and it was still in losing territory back here. But when it did manage to get back up, I mean, it didn't spend much time at all when it was going just the end part of its crash days, when this thing was pretty much going down from like 125 to the 100,000 number. So the overall perspective with this is always to overperform the markets you are doing on the long-term level. This is a situation when the markets had the declining moves. It still overperformed the market. But this is via stocks. And although stocks can have decent volatility, they still don't run in line to the large volatilities that cryptos offer. So therefore, you're going to end up with bigger moves on having more wild swings. And that can be very, very profitable. I talked about the strategy before within the cryptos that where you take like all the different coins and how phenomenally well they did before over like a 2-year sample size, just totally destroying, hodling the market. Now I'm going to explain a little bit how I do my strategy right now at this point. It's changed a little bit, but this is how I'm looking at it right now. And I'll place 12.6% of my portfolio in that of Litecoin, 9.59% in Bitcoin, 3 different codes, including that of the short of the Bitcoin or TUSD, and at high level 3, which is 5.04%. Well, no, high level, which has 3 of them at 5.04%. Next one, there's 2 of them, or 3.07% each. 7 of them I have worth 1.33%, and then the minimum I have 53 of them worth 0.917%. Now what I want to do with some of these is, let's just assume with one of these that I see the market is going way, way up. Say it's went from on its end 2,000 Satoshi where it was settling in, and it has just had a major pump to say 3,400. Sort of like what we've seen with ZEC recently, where you just have a major, major move. Well, what I'm going to want to be looking at doing is, hey, why not sell everything when it gets to a level where you just want to take a chance, because you know there's a darn near good chance it's just going to retrace from here. Sell everything and then put that back into a different fund. So let's just assume that 1 unit here went up to this, so I would sell, well, 1 unit would turn into like 1.7. Then I would take 1 more unit and put into another code I'm not even playing right now. And then that 0.7 would pretty much go into Bitcoin, and then or that percentage extra, the profit on the trade. But then what I'd be looking to do is, if this thing, say, goes from 2,000 to 3,400 Satoshi, if this thing, say, pulls back and I see it at 2,600, well, maybe I'll just sell something, get back into this again, and instead of just, say, selling, like, say, 20% of what I own, and I'll play if I want to take a chance, because I've been so good at spot, so maybe I should sell here. Also in situations, if I see one code that's got a very large, very good bearish setup, and I can say, well, why don't I just get out of this bearish setup and then get into something else? Especially when you get spots where the crypto markets aren't going up or down together at the same time, then you can be more apt to get out of the ones, like when you got like 53 here and 7 here, just get out of the ones that look very, very bad, probability speaking. And furthermore, one other way of doing it is, let's just assume, say, something in level 3 is looking bad. Well, what I could do is I could sell it down to be valued in at level 2, and when I'm ready to buy it back up to level 1, then I'll do that. I actually did such with ZEC, because ZEC was a level 2 code, and then I'm like, oh my goodness, this is just going to go down. So I sold over half of it to get it down to level 3, and it's down over 20% against Bitcoin since I last sold it. So that's generally how I'm doing it, just playing around. It's a game for me, obviously. The game, of course, gives you a score. You can manage your score and how many Bitcoins you have, how many your cryptocurrency total portfolio is worth, how much it's worth in your local fiat currency. So many different ways or score measures within the game. Thank you for tuning in and have yourself a great day. If you have any questions, please feel free to comment below, and take care. Good weekend. Bye-bye.